tokenized US Treasury products on XRP Ledger now total roughly $333 million across live institutional offerings. That number is small beside the Treasury market, but it shows real debt exposure moving through crypto rails. For institutions moving US, the useful question is whether this is a pilot-sized niche or the first measurable step in regulated debt settlement. That question matters because the headline alone does not tell viewers whether the change affects access, liquidity, regulation, security, or real usage. The segment follows the event from the confirmed move into the pressure point that decides whether the story has lasting weight. The first filter is whether the claimed change can be observed without guessing future price or motive. 4 institutional-grade products are active, led by Ondo at $221.8 million, followed by OpenEden, Guggenheim Treasury Services, and abrdn. The broader US Treasury market is about $31 trillion, so XRPL penetration remains below 1/100%. This baseline defines the part of the story that does not depend on market mood or social reaction. It gives viewers the actors, timing, numbers, product details, or legal stage needed before drawing any conclusion. It also keeps unsupported claims out of the analysis, so the focus stays on the evidence already visible. When the baseline is clear, the remaining risk is easier to separate from the confirmed change. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism behind institutions moving US is this. The mechanism is tokenization. Short-term treasury exposure is represented on-chain so issuance, redemption, and settlement can move faster. XRPL is positioned around quick settlement, low fees, built-in compliance tools, and RLUSD as a settlement asset. In plain English, the headline only matters if the process underneath it changes access, cost, liquidity, trust, security, or user behavior in a measurable way. That mechanism is the bridge between the event and the practical consequence, and it is where weak stories usually fall apart. If the mechanism does not produce measurable follow-through, the headline stays smaller than it first appears. The affected market is not retail speculation first. It is institutions testing whether sovereign debt exposure can be issued and moved with less operational friction. Every new mint, redemption, or settlement adds throughput demand, but the current scale is still far from a mature market. The practical consequence is where the story becomes useful for viewers. It shows who may feel the change first, which system is under pressure, and why the event reaches beyond a single headline. It also keeps the scope tight, because a crypto story can sound broad even when the supported effect is much narrower. The strongest impact claim is the one that can be tied back to a user, market, protocol, institution, or rule. The open question is whether these products keep attracting capital once the easy pilot phase ends. Growth into billions, broader issuer participation, and steady redemptions would matter more than a single headline total. That distinction prevents the strongest claim from outrunning the evidence. The confirmed part can be followed now. The unresolved part needs a trigger, response, filing, wallet movement, usage data, court step, governance action, or market signal. Until that arrives, the story should be read as a live test rather than a settled outcome. This is also where viewers should ignore claims that cannot be connected to the actual next step. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. For institutions moving US, the next signal is whether XRPL-based Treasury products keep scaling beyond the current for-product base. If flows grow while settlement stays reliable, tokenized debt becomes a market structure story rather than a crypto slogan. That is the closing readout. Track the concrete signal, not the loudest interpretation, because the next confirmed step will decide how the story should be read. If the signal appears, the event gains weight. If it does not, the headline remains narrower than the attention around it. The clean read is to follow the proof point and revise the view only when that proof point changes.